Hi there, this is Alvin from Dr. Well. A lot of things have been happening in China, especially regarding Alibaba. So we do see some rebound in the China market, and I guess some of you have always asked me that what's going to happen to the China market. Is this going to be a real rebound, especially for Alibaba? Right, a lot of investors are concerned after a long slump, and they are finding some good news, right? And the latest good news is that the co-founders of Alibaba, Jack Ma as well as Joe Tsai, has invested up more than $200 million into Alibaba. Okay, so they bought Jack Ma bought about 50 million and Joe bought about $150 million. And it come at a time where the stock has been slumping, and in fact there was previously a news that Jack Ma was trying to sell his Alibaba shares up to $870 million, but it was cancelled or reversed eventually because he said that the price is just too low to let go. So 180-degree change of plans, he started to buy instead. And for Joe, the last time he bought was 21.7. That was 6 years ago. So again, 6 years ago, the price was probably a lot higher than what it was now, and hence probably he's averaging down, or he may have some insider news that Alibaba transformation may be coming soon, right? So these are just conjectures. They may not be the real reasons, but I guess it's always a good sign that insiders are buying. It shows the confidence in the stock itself. But I would say that don't be too happy. Okay, I'll give you my reasons later. This is the Alibaba share price. They've gone up 11% in the last few days, and that is pretty much what investors have been hoping for. And of course, the next question is, can Alibaba sustain this rally? And some people also started to get interested because I was scanning the social media. Yes, there's still a lot of China bashing investors, but there are also some investors, they started to feel that it is really very low, and it makes sense for a low risk high return kind of bet that's going on, and more are trying to consider whether it is time to buy China stocks, right, or even Alibaba. But again, later I'll give you my views where I think the rebound may not be confirmed yet. All right. Of course, there are some positive news. After the stock market rout at the start of this year, China market has been down for 3 consecutive years, and then at the start of year four, it still went down, and Hong Kong market was overtaken by the Indian stock market in terms of total market cap size, and there are a lot of all this not so nice picture that China is painting in terms of, especially from the stock market angle. Hence, I guess it is time to arrest this problem and clean up the image. And hence, the Premier Li Qiang has ordered, finally he came out and say something, right? The Premier is like the number 2 guy in China, and he said that we need to rescue the stock market. And that is the music to investors' ears. And it was not just talk only, because there were a lot of measures put in place. The first one was that there was a rescue stock package, right, which means China is going to pump in their own money to buy up the stocks up to $278 billion. Okay, is it enough? I'm not sure, right? But at least something is moving. At least there is a resolve and a will from the top. And in China, where top-down management is important, when the boss say yes, all the minions will start to follow. So I think that at least is the best starting point, right? Rather from a ground-up perspective. And second is the central bank didn't cut any rates the last round, right? And suddenly they say, oh, we're going to cut rates in February. And typically when they cut rates, it's probably about 25 basis points. But this time it was double of that, 50 basis point. So there was a 180-degree change in that direction. And I believe this is also from the direction of the State Council or the Premier in this aspect. And this is Alibaba share price, right? It is pretty ugly, okay, especially for the last few years, for the last 3 years to be more specific. The share price currently, after the bounce, it is slightly above the $68 IPO price, right? But imagine at the start of this year, the share price actually went below IPO price, right? It was that painful. And it was not just once, but many times. It has tested the resolve of investors. And the share price had peaked in late 2020, and after the Ant Group IPO was cut off, the share price just tanked from there and never really rebounded, right? In fact, it halved 2 times. What that means is that the share price dropped 50%, and after that it dropped another 50%. It's like radioactive substance, right? It has a half-life of don't know how many years. less than 3 years, it half-life 2 times. So from 315 to 156, then to 79. Okay, so that's what I mean by 50 and 50 and 50. Okay, so will it drop another 50%? I personally don't think so, right? I personally don't think so. I think the worst is probably over, but it doesn't mean that the best days are ahead, okay? Or it doesn't mean that the better days are ahead. And this is why I want to share with you this thing. I've been always sharing this in more of my trading course, and I think that if you want to buy stocks and get some capital gains, and not all stocks are meant to be held forever, right? And hence it is important that timing comes into picture, right? I know you always hear about people talking about you can't time the market, you should just buy and hold long term, but on contrary, I will also argue that most stocks are not worth holding forever. And this is something that I think people miss the point, that you will always buy a stock that is worthy to hold forever, and that's not true, right? Accuracy rate is not high. Even Warren Buffett make mistakes. The rest of us will make even more mistakes than him. Hence, actually buy and hold can be very risky, right, if you buy the wrong one. So I would say that for stocks that are not worthy for buy and hold, you have to trade it, right? You have to have a good timing. And this Stan Weinstein stage analysis comes in very useful, right? Later you will see that structure that will apply to Alibaba stock. Okay, so in this picture, let me just blow this up for you. You can see that there are 4 stages, right? Stage 1, 2, 3, 4. So in stage 1, that is where the share price is range bound, not moving in a one particular direction. Okay, I can say that it's moving in a sideways direction. Okay, it's not moving up or down, right? Just sideways. And stage 2 is going upwards, right? Nice uptrend. And stage 3 is also a range bound phase. You can see it's also sideways. And the difference between 1 and 3 is that 1 is at a lower base, 3 is at a high base. Okay, and then stage 4 is the opposite of stage 2, which is the declining phase, and where the share price continues to slide down. All right. Hence, the best time to buy and sell the stock is actually in stage 2. Other stages does not. It will be less favorable for you to buy stock. Definitely not 4, right? Because if you buy at 4, it can keep going down, and you catch a falling knife, right? What is low can be lower. Like for example, Alibaba half 2 times. Even though you drop 50%, or you think that it's cheap enough, you buy at 150, you lost another 50%. Okay, same as the guy who bought at 300 and sell at 150. You end up buying at 150 and hold to 70. It's the same. Okay, you lose 50%. Hence, stage 4 is risky to buy a stock because you don't know where the bottom is. And stage 3 is also risky because it's at a high point and it seems like it doesn't have energy to move up even further. And likely, the chances of it declining is even more because it seems like the stock is changing direction. And stage 1, people may say that, yeah, that's a good time to buy. But again, stage 1 can last for many years. Okay, 3 years, 4 years, 5 years. How long are you going to wait when you see the rest of the stock market goes up and you're still holding a stock that doesn't, right? So stage 1 might be too early. And the best time, of course, is to buy at early stage 2 and then you get out at late stage 2. Okay, so that is what this whole structure is all about. And it can be very useful, all right? Because I'm going to show you Alibaba share price. As you can see, Alibaba has slided, the share price slided since 2020, and it is in stage 4 until around October 2022. That was where the overall global stock market recovered. That was the bottom, not just for Alibaba, but also for the US stocks. Okay, after October 2022, you see that the US stock market started to rally, had a good 2023, and then the start of 2024, a bit shaky at the start, but now, at the time of recording, is doing well again. And now Alibaba is actually in stage 1. Okay, it's range bound, right? It's range bounding. Yes, there was a bit of like rebound in early 2023, but then it fizzled out, and then it started range bound. So yes, it has not been going up. There's a lot of bad news, but on the other hand, it is also not like getting below the 2022 low. Okay, and that is a good sign because you don't want that to happen. If that happens, means that the downtrend or the stage 4 might not be completed yet. But it seems like the stage 4 is done for Alibaba. Now it's stage 1. And despite the bounce in recent days, it doesn't mean that Alibaba is out of the woods, right? You can see that it is still at the bottom end of the stage 1. It needs to at least move to the higher section of the stage 1 and even cross the high that has been made in 2023. That was about $120. Okay, of course there are other signs, right, which I will explain a bit more later. And this is Pinduoduo. Look at the difference, right? So it also had a stage 4. It started later, okay, in early 2021, and the share price went down, and around 2022 March, it bottomed. So it actually bottomed earlier than the rest of the market. So the decline started later and the bottoming started earlier. And then the stage one happened, right? Range bound a bit. It was a very short range bound. In fact, you can even argue that it started to move up. But the stage two, I would say, officially started around 2023. Okay, 2023, and then there was a correction when US stock market, due to the banking crisis, went down. It went down together, and after that it continued to went up and now the market cap is more than Alibaba. So you can see that this stage 4, 1 and 2, that's what it should look like. Okay, Alibaba is still in stage 1, it's not even in stage 2 yet, whereas Pinduoduo has been in stage 2 since 2023, and that is the big difference that we're looking at. So it's not all China stocks have been beaten down, some has actually recovered quite well. Okay, so I hope you can see the difference between the stages, and it's usually at the start of stage 2 that is we can consider that the stock is in a recovery mode. Right now it is, Alibaba is still in the stage 1, and there's some other indicators, right? Price is still below 200-day moving average, and the 200-day moving average is pointing downwards. Shorter moving averages are below 200-day moving average, and the stock needs to clear 120 to get out of the consolidation phase, which is exactly what I mentioned just now, right? But let me just show you again. Okay, you can see that the 200-day moving average in this case is the red curve, right? The red curve is pointing down. And why is it significant? Because the 200-day moving average is like a general indicator of a trend, a long-term trend on the stock. So if it's not pointing up, means that the overall trend is still down. Okay, and for a trend to be up, all the shorter moving average should be above the 200-day moving average, right? For your information, the blue line is 100-day and then the green line is 50-day. So they are all shorter than the 200-day and they are now below. In order for it to be a bull, it should be something like this, right? You can see the blue line and the green line are above the red line, and the red line is pointing upwards. But you can see Alibaba is opposite, right? The green and the blue line are below, and then the red line is pointing downwards, right? So all these are not good signs, right? If price also below the 200-day moving average, okay? So it is really very early to say that Alibaba is rebounding at this point in time, and I do believe that it needs to sustain, right? It needs to sustain in order for Alibaba to get out of the rut, right? It's a deep one. And of course, there are definitely good signs, right? As I mentioned, it is a top-down direction that China wants to save its stock market, and that has been absent for the last 3 years. And hence, investors have so-called given up hope. I think that they are very used to the Federal Reserve coming in to save the stock market by cutting rates, right? So they expected China to do the same, but it was somehow missing. And people just ran out of patience, and they feel that it's hopeless. But now there is a change, right? It seems like the government is interested to save the market and determined to save the market, and some moves have been taken, quite larger than normal moves that they have taken compared to the past. So those are good signs, right? But it needs to sustain in order for the overall market to improve. And if the overall market don't improve, Alibaba won't improve, right? Definitely. Okay, and probably the government also needs to show some friendliness to Alibaba, because there is still that worry or the concern that Jack Ma has overstepped himself, and hence the government wants Alibaba not to prosper, right? So I guess a little bit of friendliness would help in that sense. And the second thing is that besides being too early, right? Besides being too early to call a sustainable rebound, the reason is also because China has a lot of forced rebounds in the past. A lot of strong rebound, bounce up, 20-30% gain, and then after that it fizzles out. Right? Not once, not twice, not thrice. I even forgot how many times already. They just fizzle out. And again, a lot of skeptics are around, right? And confidence are lacking. And if the narrative around China is still negative, right? China is uninvestable, blah, blah, blah. You just don't have enough of that capital flowing in, and that may not be able to sustain the run, right? So hence, I believe that while there are good things on the horizon and the tone of the government has changed, but it doesn't mean that the rebound is here to stay. Investors should still tailor your expectation properly and not trying to be very overzealous and be aggressive about this at this point in time. That is what I want to share, right? So I don't think Alibaba is now a time to call for a clear rebound, right? Not yet, okay, not yet. Hopefully you like the video and you have a more informed decision right now to handle your investments, and hopefully you give me a thumbs up, like the channel, subscribe to the channel, and I'll see you in the next one. Goodbye.